welcome everyone to NCIA's Industry Essentials webinar series. I'm Brian Gilbert, NCIA's Director of Engagement and Experience, and I'm thrilled to welcome you to the inaugural episode of a new multi-part Committee Insight series, with this edition being brought to you by NCIA's Banking and Financial Services Committee. We're at a pivotal moment in the cannabis industry, with the potential rescheduling of cannabis to a Schedule III drug. In this session, Schedule 3 and Section 280E, what does it mean for me? We'll delve into the transformative implications of this change and how it will affect the application of Section 280E of the Internal Revenue Code. This session is designed for cannabis business owners, financial professionals, legal advisors, and industry stakeholders who need to navigate these complex regulatory changes. And as always, we're excited to have a panel of industry leaders, all of whom sit on our Banking and Financial Services Committee, no less, here to share their insights and answer your questions during our comprehensive Q&A session. To kick things off today, I'd like to welcome Naomi Granger, Chair of NCIA's Banking and Financial Services Committee, as well as current NCIA Treasurer, to moderate today's conversation. You can activate your video feed and join us on the virtual stage. Great to see you here, Naomi, after a very impactful few days in Washington, D.C. earlier this month. Thank you so much for joining us there and moderating today's program. With that, I'll turn it over to you to lead the panel through some brief introductions and get the show on the road.
Awesome. Thank you so much for having me. Happy to be here. I want to just start off with giving a brief introduction of all of our panelists. And so we can start with Stephen. I'm just going to go in the order of the pictures on my screen. Stephen, if you can just introduce yourself, what your firm does, and your areas of expertise.
Hi, thank you for allowing me to join. My name is Stephen Gottsteiner. I'm a Senior Director in the Cannabis Solutions Group of HBK CPAs and Consultants. Our group focuses predominantly on cannabis companies, either hemp or marijuana, and predominantly marijuana. We do all things that a CPA firm provides, accounting work, attest work, due diligence, quality of earnings, tax planning, tax consulting, tax preparation, and valuation work.
Awesome. Thank you so much. Let's move on to Neil. Can you please introduce what your firm does and your areas of expertise?
Oh, thanks, Naomi. Neil Rosenfield. I'm based out of Los Angeles. I'm with Baker Tilly. We are the largest national CPA firm currently serving clients in the space. I work with clients all the way from, from beginning to end, let's call it. We work with MSOs, I work with private investors, startups, etc. And Stephen just whatever Stephen just said about what he does, we do the same thing. So I'm the Cannabis Tax Practice Lead, and we offer an full array of services to the cannabis industry.
Awesome. Thank you so much. Eric, please introduce yourself and your areas of expertise.
Thanks, Naomi. Well, first, let me thank Brian and Aaron from NCIA for putting this together, and Naomi, you for moderating. I do want to call out from the poll that 100% joined this for knowledge building, but only 7% joined it for the speaker lineup. So none of us take it personally, but I think it should be acknowledged. And one person joined because their boss made them. So so thanks for that. In any event, Eric Kaufman, COO of Funcanna. Funcanna, for those that don't know, is a leading lender to the cannabis industry and the supply chain. We assist by providing products such as working capital, vendor financing, factoring, equipment financing, and really try to put together a suite of products that are flexible, reliable, renewable, and customizable. Specific to cannabis, we've underwritten over 2,500 cannabis businesses, approved more than $250 million to the industry across all verticals in 40 states. Prior to Funcanna, the leadership team has put out over $20 billion on balance sheet to underserved businesses and individuals across the country. One of the things we really try to do is ingratiate ourselves to the industry, and we do that by forming strategic partnerships with complementary businesses so that we can all meet our customers where they're at. And we've done that with companies such as Distru, Standard C, Green Check Verified, Dama Financial. But we're also very proud of the partnership we have with the NCIA. For those that do fund with us, we underwrite your membership for a year. And I see that 57% of the people that responded to the poll are not NCIA members, so be happy to help you. Thank you, Naomi.
Awesome. Thank you so much. Aaron, can you please introduce yourself?
Yeah, thanks, Naomi. I'm Aaron Smith, the CEO and co-founder of NCIA, the National Cannabis Industry Association. Since 2010, we have been lobbying Congress and the federal government on federal policy reform, specifically on behalf of independent and small cannabis businesses, making sure that as the rules of legalization and regulation at the federal level are being written, there's a seat at the table for us, for independent businesses, and that this isn't going to be, all swept up under big alcohol, big tobacco, and also making sure that there's a voice beyond just the top few MSOs that can hire their own lobbyists. We're really making sure that we're stronger through our collective voice than we would be individually. So, really want to thank all of the members on the call or on the webinar here. That 57% that aren't members, look forward to talking to you. And most importantly, thanks to all the panelists that are going to share your knowledge today.
Awesome. Thank you so much. And lastly, I'd just like to introduce myself. I will serve as your moderator. My name is Naomi Granger. I'm a CPA and MBA, and I serve as the treasurer on the board of the National Cannabis Industry Association. I'm also the CEO and founder of the National Association of Cannabis Accounting and Tax Professionals. I work specifically with social equity operators and smaller startup operators as their accounting professional in the cannabis industry. I also provide training and education to other accountants who want to get started and build a book of business in this industry. So happy to be here. And we are going to just kick this off with Aaron, our CEO and co-founder, just to give us an overview, a lay of the land of what's going on. What does this mean? What does it not mean with this whole rescheduling discussion?
Yeah, absolutely. Thank you. Well, this is for anybody who's been following cannabis reform efforts through the years. This is, just unquestionably the most exciting time that we've seen in the history of the country. Right now we're at a point where just a few years ago it was hard to get attention on the need for marijuana reform, the need for the cannabis industry to be treated fairly under federal law. And today we're at a point where the president of the United States actually mentioned the need for cannabis reform in the State of the Union address. And the reason we're here today is that last week, the Department of Justice has opened up public comments on a move to reschedule cannabis from Schedule 1 to Schedule 3. Cannabis currently residing in Schedule 1 status, where it's been since the Nixon era Controlled Substances Act was drafted in the 70s, means that it is, by the federal government standards, has no medical value and a high potential for abuse. The proposed move by DOJ and DEA is at the recommendation of the FDA and the Health and Human Services Agency, is to move to Schedule 3, which is still a high potential for abuse drug, but acknowledging medical value. That puts it alongside synthetic THC like Marinol, as well as alongside drugs like ketamine and anabolic steroids, as opposed to being alongside drugs like heroin and LSD, where it currently resides. This is a hugely historic moment because there's just been no movement at all on this issue. However, it's really still a first step as we see it toward a larger goal, which is, the industry as we know it today, certainly on the adult use side, but really on the medical side as well, will still not be in alignment with federal law once rescheduling happens. The only way to comply with a Schedule 3 would be to move a drug through the new drug approval process at the FDA, which is upwards of $1 billion endeavor. And then Schedule 3 drugs can be prescribed by physicians under very, very strict controls and then dispensed through pharmacies. That's not our industry, right? Our industry is creating whole plant cannabis products. We're regulated by the states to do so, and in many cases, most Americans live already in a state that is where an adult over 21 can purchase a cannabis product. So we're not talking about medical. That said, so there's a lot we talk about. I find myself talking to the media and others these days about what rescheduling doesn't do. I get a lot of questions about, what will this mean interstate commerce? Will this mean that, we're going to have better access to financial services? And, there's a lot that it doesn't do. And that's why we're working toward an ultimate goal of descheduling cannabis. But there's one thing it does that is hugely positive for the industry, and that is reform Section 280E. Allow Section 280E to no longer apply to state legal operators, because the little-known provision in the tax code that was meant to prevent the cocaine dealers in the 80s from deducting their ammunition and guns and speedboats when they were trafficking cocaine through the country. That provision now only typically applies to legal operators of cannabis dispensaries and manufacturers in the country. That provision only applies to Schedule 1 and 2 drugs. For whatever reason, that's how Congress defined it. That does not apply to a Schedule 3 drug. So once we move to Schedule 3, that resolves the 280E issue, and that is why. But there's a lot of complexity around that, and that's why we have experts like the folks who have joined us here today. So hope that kind of helps lay the groundwork there. And back to you, Naomi.
Yeah, awesome. And one other thing to mention that it does not do, it does not make it federally legal. There's a lot of buzz out there that people think that, oh, now it's legal now. And another thing that we should probably touch on, there's a process to this. It's not Schedule 3 yet. And maybe you can briefly touch on what is the process to get it to Schedule 3? Is that going to happen before the end of the year? Is it going to happen 3 years from now? What does that look like?
Well, the answer is we don't know. But the public comment period opened last week. So right now you have hundreds of comments have already come in from stakeholders throughout the country and individual American citizens. NCIA is developing public comment on behalf of our members. That window is open for the next 60 days, so that carries us through mid-July. And then there's an indeterminate amount of time that the DEA has before they actually make the rule change. So we don't actually know when this is going to take effect. I can't promise anything. However, in my opinion, I think this will be done by the end of the year, because I think that there's a political process that's in play here. This rescheduling was initiated by a request from the President of the United States well over a year ago, and he requested that FDA and HHS take a look at the classification of marijuana, and doing so implicitly because he's saying that the classification was inappropriate. This is coming, the recommendation is coming to down schedule to 3. And there's an election coming up in November. So, this is, frankly, probably being done because they are looking to capture the interest of younger voters in the Biden campaign, that they know younger voters are definitely, and all voters actually want to see, or not all, but about 70% want to see cannabis made legal. And so this is something they want to be out in front of. So I think there's great urgency in trying to get this done before the election, and then certainly before January 25th, because if the election goes the wrong way for President Biden, then typically agencies want to get these sort of things buttoned up before another administration comes in, because if it's not, then the change could actually be held up and maybe indefinitely. But also, we don't know that this could be held up in courts. That's another thing that could happen, that we can't really anticipate exactly how that's going to happen, how that's going to play out. But I would not be surprised if legal challenges are filed against this move, and that delays things further.
Awesome, thank you. And as Aaron mentioned, we are currently in the public comment period. It started May 20th and it goes to July 22nd. And we're 10 days in and there's already over 8,000 comments. So it's Anybody can issue a public comment, so please feel free to weigh in on that as well. I want to just move on to, and this question is for you, Neil. How much money are we talking? Like, how much is this 280E tax costing our businesses? And if this 280E tax were to go away, do you have any estimate, or what are you looking at as far as maybe percentage of revenues that your clients are going to get, or even some dollars, hundreds of thousands, millions that are going to come back? What does this look like?
Yeah, thanks, Naomi. And first of all, Aaron, thanks for that summary. I thought you were going to come up with a crystal ball and tell us exactly when this is going to happen, but guess we're going to have to wait for the legislation to work through it. But that's a difficult question. It really depends on, first of all, the size of the client, but potentially, I work, as I said, with MSOs all the way down to startup operations, and it could be huge. It also depends on the type of facilities you're running. If you're running manufacturing distribution, it's 280E is not as onerous as if you have a retail operation, which are honestly taxed probably about 70-75%, whereas the others are taxed more, probably 50 to 60%, as opposed to the regular tax rates, which could run anywhere from 21 to 40%, depending on the type of entity. So yeah, I think overall, if it does get, this could be hundreds of millions. They're talking about billions of dollars throughout the entire industry, but it's going to have a huge impact on cash flow for any of the state-regulated businesses.
Naomi,
Okay,
just
great.
if I could add one thing, I had read a report that said in 2022, cannabis businesses paid 1.8 billion more in tax revenue than non-cannabis businesses just because of 280E.
Yeah.
So again, depending on vertical, but in the aggregate, 1.8 billion more. Put that back into the ecosystem, that's obviously a significant impact.
Yeah, huge number. Thanks, Eric.
Yeah, awesome. And that goes directly into my next question. So when will this be effective? So a lot of people want to know, hey, should I wait and hold on and not do my 2023 taxes? Can I amend all the way back to 2020? Like, what is the effective date of when we can go back and recoup some of those taxes, save those tax dollars?
You want me to continue speaking on this? Or
You can, or Stephen, if you want to chime in as well.
sure.
We're happy to. As far as the effective date, nobody really knows. And we don't know if it's going to be prospective only, or if there will be a bifurcation during the calendar year in which it's the effective date lands, or if it will have any retroactive application. More likely than not, it will not be retroactive. It will only be prospective. But again, we don't know what that effective date is going to be. As far as filing amended returns, there are a couple different strategies to file amended returns today to recapture the tax dollars associated with the expenses disallowed under Section 280 Cap E. And some of our clients are using those strategies. We've had clients that have received some refunds. We have all read in the paper about other cannabis companies that have received over $100 million in tax refunds. Those refunds are not set in stone insofar that the IRS has not audited or reviewed those amended returns which generated those refunds. It still has the ability to amend or to audit those returns and recapture some of those refunds. But there are some strategies to use. And going forward, those same strategies can be effective, and I could still utilize those strategies to reduce the tax burden. But again, we just need to wait to see when the effective date is and what Congress is going to do and what the IRS is going to do with respect to the amended returns.
Maybe if I could just add on to what I agree with everything that Stephen said there, but yeah, this is a long, drawn out process for filing not only amended returns, so far as the amended returns, my firm is a national firm, and as Steve and I, we discussed this the other day, we all going through a lot of background checks, and the clients require legal opinions. It's a very expensive process. The MSOs have got the money and they're willing to put up, a few $100,000 up to $500,000 in both accounting and legal fees in order to challenge this. But companies must realize these will be challenged. You have to file. Well, we're suggesting we won't file amended returns unless they are accompanied by a Form 8275, which basically is disclosing to the IRS, come and audit me. And so you've got to be very sure of your position. You've got to have the right legal opinions before going there. The startup and smaller clients are not going to spend that type of money. We're not suggesting on the 2023, we are suggesting to file as if you would have filed last year. No change at this point in time. Let's see where this goes over the next few months.
And as a backstop, and Neil, I agree with everything that you just said. We are a regional firm, so we have clients around the country. And what we are seeing is that a lot of our clients, the smaller clients, do not have the readily available cash flow to fund the legal fees for the tax opinion letter to allow us to file those amended returns. But as a backstop, we're seeing a change in accounting method to 471C, which allows certain the cannabis companies to change their method of accounting for inventoriable costs associated with their product, which would effectively move the otherwise disallowed sales, general, and administrative expenses out of disallowed expenses into an inventory cost or into a cost of goods sold. There's certain expenses that I think we need to be cautious with, but I think that the door is fairly wide open right now under this 471C exception. And as a backstop, I think it's a wonderful strategy.
Awesome. And Neil and Stephen, are either of you guys filing protective claims for your clients?
Yes, we are. We've been filing the protective claim throughout this calendar year, and will continue as long as the statute of limitations is still open on those returns, which is generally 3 years from the due date or extended due date, or if the return was filed delinquently from the date of filing. And we will continue to do that as long as our clients want to. That's a great question, Naomi.
Well, actually, that came from our audience, Susie. So thank you. Also, so I would like to, I'd like to move on and talk a little bit
Can I
about.
just call out one thing? I'm sorry. I just wanted to, I think just as I was listening to everybody, one constant that we heard between Aaron, Neil, and Steve is we don't know. When will it go into effect? Will it be retroactive? We don't know. So I think the thing that's really imperative to point out is run your business today as if it's not happening. If you're planning on 280E to save you and just get a windfall of cash in the future, you're really simply mortgaging your future, because we don't have a lot of answers. We don't know when it will take effect. So just run a responsible business today as if it's not coming into effect. And then, you'll be in a great position when you do have the ability to take advantage of the change.
Okay, awesome. And let's move on to capital. Eric, I just want to move on to you as well. So do you think this move to Schedule 3 will help reduce the cost of capital for these operators?
Yeah, it's an interesting question. Will it reduce? The fact is, more banks and financial institutions will look at cannabis. There's no doubt more money will flow in. But let's remember a few things. Even if cannabis was federally legal, which 280E does not, or rescheduling does not make it federally legal, and a lot of the questions we get asked really pertain to it being federally legalized. It's not going to be federally legal. But even once rescheduling happens, which is a major step forward, cannabis is still a vice category, right? And many banks will not touch vice categories that are federally legal: tobacco, alcohol, firearms, gaming, etc. So you can assume that it will be at least as restrictive for cannabis as those categories, and at least as expensive. Moreover, I think if we pause for a second and just suspend reality and say cannabis wasn't a vice category, just for a second, most cannabis businesses, excluding the MSOs, are by definition small businesses, right? And most banks decline their own depository customers for small business loans at about 80%. So I think you'll probably see something similar. So this is a great step in the right direction. More capital will come in. It will still continue to be challenging. I think some of the beneficiaries, there'll be a lot more capital to go towards research, which is phenomenal. There'll be a lot more avenues to raise capital. There'll be more alternative lenders that come in. The purse strings will loosen a bit, particularly because of the exuberance around 280E, but I don't know that it's necessarily the green rush everybody's hoping for. But yes, I think it will start to trend in that direction.
Okay, awesome. And then this is for anybody can chime in, but kind of leaning towards that. Now, there's going to be if 280E goes away, there'll be an influx of increase of cash flows as well as possibly more capital. How do you recommend that these operators deploy this new capital in order to scale and grow their businesses?
Well, I can just chime in quickly. I know Eric Scott is going to add a lot more to this, but as we discussed, we discussed this in our pre-call yesterday. We got to make sure that you use these funds in the right way. Run your business as a business. Use the funds to deploy extra capital into operations, additional fixed assets as needed. Do not go out and buy Lamborghinis and boats and guns and whatever else. Well, the guns you may or may not need, but I'm not going to go that way. But used sensibly. Don't go spending this money frivolously.
And just to add on that, Neil, if they were in an acquisitive mode, they could always look to your firm or to our firm for quality of earnings of targeted companies. And that would be a great use of capital. So they make their acquisitions with the direct intention of what their goals are and what the quality of earnings will lead them to.
That's if they're looking for a transaction.
Correct.
Yeah.
Well, and I think like if you're looking for a transaction, if it's to be acquired, the acquirer is going to look at your books and see if you run a disciplined business. Yeah. And if you go out, as Neil said, and buy a Lamborghini, that's not very disciplined. In an industry that's approaching 4 billion in outstanding AR, true up some of those outstanding invoices, because this is an industry where everybody works hand in hand. So again, it's just running a responsible business. And if you do that today, you'll be successful when 280E is revoked. If you don't do that today, then you're just going to have the same issues, just on a grander scale.
Okay, awesome. And before we get too far into this discussion, there was a question about protective claims. Can you explain exactly what that is?
A protective claim for refund is filing a return that's not going to be acted upon, that states a position that the taxpayer wants to amend their tax returns in order to generate a refund or to increase its net loss or reduce its taxable income. But the protective claim for refunds that we file have a header at the top of the tax return on page 1 that clearly identifies it as a protective claim for refund and and tells the Internal Revenue Service not to process the return at this time.
Okay, got it. If there's any additional questions on that, let us know. All right. What do you guys think? Do you think if we move forward with this, is this going to benefit MSOs or smaller businesses more?
It's going to benefit everybody. It'll be from beginning to end, basically. Obviously, the MSOs have the most to probably gain from this because their incomes are higher than everyone else. But I'm looking at all my regional clients and my private clients that I work with across the country. Everybody will benefit from this. It's just a matter of how much.
Yeah, including the publicly traded companies.
I think on the day-to-day, we mentioned earlier that, right, 1.8 billion in additional taxes because of 280E. You remove that, obviously it'll benefit everybody across the board. I think for some of the smaller players that are living a little bit more hand to mouth, it'll loosen the daily stress, whereas the MSOs have a bit more flexibility and ability to raise capital and the ability to be more fluid in running their operations. Those that are really running on tight purse strings, hopefully this frees them up and enables the industry. Again, the outstanding AR, that's a trickle-down effect. And if everybody or many people are able to true up, it makes its way through the entire supply chain, which makes everybody healthier and stronger.
Yeah, it will also benefit everybody in the cannabis industry, the people that are working on the periphery, the PR people, the bankers. Well, that's a whole different story. But obviously, it'll free them up to pay their invoices, to pay for whatever it may be, repairs, accountants, attorneys.
Awesome. Thank you. And that answers the AR question we have. All right. So now there's also been some rumblings around that people are speculating if 280E goes away, IRS is just going to implement another excise tax for this industry to make up for the gap. What are your guys' opinion on something like that coming out?
I think it's certainly possible.
Well, I would point out the IRS couldn't implement an excise tax. It would take an act of Congress, and so which is a big lift these days. And any tax on cannabis at the federal level needs to be accompanied by, in our view at least, descheduling and a federal regulatory framework, and not just a tax that just tries to kind of fill the gap without the bigger picture. Although I wouldn't be surprised if there are efforts in Congress to try to institute a tax without the accompanying regulations, and it's something we need to really look out for.
All right. Anyone else? Okay. Okay. And so now, will this rescheduling have an impact on the industry's ability to take advantage of some of the federal benefits like bankruptcy protection?
That's a completely different topic, I think, than what we're discussing here today. So that will leave for the attorneys, I think, to answer. I don't believe it will, but things may change.
Okay. What about IPOs being able to start going public?
Again, it's not federally legal.
Yeah.
This doesn't, what I think this rescheduling does is creates positive momentum for all of these other things, but it doesn't put them into effect as of today.
Okay, got it. Oh, this was an interesting question that I just saw that came up in our Q&A. So it says, aren't the taxes from the cannabis supposed to be earmarked for social programs like drug addiction assistance and social capital programs? If so, would that $1.2 billion be diverted away from these programs? And this might, create some concern. What are you guys' thoughts on that?
Well, I can chime in. So this, federal taxes, there is no federal tax actually on cannabis. So that's earmarked for anything. So I think what the question is referring to is various state programs and state tax regimes, which often do earmark taxes for those sorts of programs. But there's no earmarked for the kind of the funding that's coming in from 280E, which is corporate income taxes that are being allocated to hundreds of programs. So I think that ultimately, when we do have that federal excise tax, I think that that's something we need to very, very much look at, is where do we allocate those funds rather than going into the general fund.
Okay. And now we have another question that's saying, would this open up more options for municipal banking? Yeah, will this open up more banking options for cannabis? And I guess the overarching question is, does this reduce the risk factor for coming from banking, coming from insurance? We talked about access to capital. Will this reduce that risk factor and open up more options for cannabis operators?
I think, and it also kind of dovetails with safer banking, right? How does this impact that? Again, I think this pushes positive momentum to further make additional changes and push other bills through. I think safer banking is a great thing, especially politically. It's a step forward. But the fact of the matter is you can get a bank account today if you want one. There are over 800 banks providing banking to cannabis-related businesses. So if you want to have one, you can get one. So I think safer banking is probably 5 or 6 years past due. It would be great to have it as a political football moving us down the field, but a bit dated, but would be great to have it. So again, I think it's positive momentum. Does this reduce the risk? I think if you remove 280E, you've got more companies with better balance sheets. So in that regard, I think it reduces the risk. I don't know that it necessarily legally, as we said, we don't know about bankruptcy. It doesn't federally legalize it. So there's still a lot of unknowns, but again, a step in the right direction.
Okay, awesome. And now we also have a question. So there's a confusion about the difference between rescheduling and descheduling. What's the difference and which is the better option for this industry?
Yeah, I can take that. So, rescheduling is what we've described, which is, moving, the cannabis to a different category in the Controlled Substances Act, which lays out a list of 5 categories of drugs, Schedule 1 being the most dangerous with the least medical benefit, down to 5 being the least controlled. And so this is a great step in that it's loosening the controls by moving it from 1 to 3, or would be when this happens. Descheduling, on the other hand, would be taking cannabis out of that list and treating it in a different way. So drugs like tobacco and alcohol are drugs that are used in this country and acknowledged as such by the federal government, but they're not on the list of controlled substances. They're not controlled by that act. And there's other regulations that apply to them. So for this industry, as we keep talking about all the things that descheduling doesn't do, well, most of the answers to those questions are, well, descheduling would fix these issues, as rescheduling does not. So ultimately, we do need descheduling as the kind of ultimate need for the industry, and we need federal regulations that treat cannabis products appropriately based on their use. So, if you have intoxicating products, whether they come from hemp or from marijuana or biosynthesis, intoxicating products, we believe, should be treated more comparably to alcohol. And then if you have, other non-intoxicating products that are, CBD products and such, should be treated more like nutraceuticals. And that's the goal, the end goal. Rescheduling, though, is the only real plausible outcome from an administrative action like this. I think that it would be pretty unrealistic for us to expect the DEA or the administration to just unilaterally take cannabis from the most controlled, the most restrictive Schedule 1, and then just say, okay, it's no longer scheduled at all, and then Congress go figure out the regulations. Like that's not going to happen. And while we continue to beat the drum for descheduling, that needs to be directed at Congress, because that's where that's going to happen. And it would need to be accompanied by regulations and probably taxes, whether we like that or not. So the answer is descheduling is better, but rescheduling is a good step. And I think, as Eric mentioned, it's really great in that I think if we play our cards right and we keep focused, this can be really the momentum that we need to get us to the point to where we've got, full descheduling and decriminalization down the road. And that's going to be a really important thing for this industry to focus on going forward, is making sure that we continue to make sure Congress understands the work isn't done and they have to keep pressing forward.
Does descheduling effectively legalize it?
Yeah, descheduling is another word for federal legalization. And I think that's a good question, and and therefore would pretty much resolve all of the other challenges that the industry faces as a result of prohibition right now.
Awesome. All right. And then we have another question about if it's rescheduled from Schedule 1 to 3, who in government writes those rules? And I also had confusion about that. I thought maybe the IRS now has to come in and rewrite the tax code, and all these different agencies have to come in for research and development and all these things. Will the DEA outline exactly what that looks like in the rescheduling process, or will there be a bunch of other organizations coming in?
So the DEA under Department of Justice is the only agency that has the authorization to move move marijuana up or down, or any drug up or down in the scheduling. So it will ultimately be up to them. As far as what the regulations surrounding the drugs in the various categories and the various schedules, that's already kind of baked into the Controlled Substances Act, which is under Congress's purview. But they're basically just moving it from one predefined category to another. So under federal law, it will be, again, treated like ketamine, for example, as one where, it is legal under very strict controls. A doctor that prescribes ketamine has to file forms in triplicate with the DEA, and same with the pharmacy. It's a very strict situation. The ketamine that's sold has to go through a very strict process with FDA approval. And again, as we said multiple times, that's our industry is not really poised to be following that pathway, which is why we need another regulatory pathway ultimately for cannabis.
Yeah, because cannabis is the only drug on the schedule that has an adult use application. So it seems like there needs to be a huge overhaul,
right,
of what that means.
I kind of feel like this move, while it's momentous, this is wonderful, and it's going to be great for the industry. In some ways, it's like, okay, well, federal government's catching up to California in the mid-90s. And so now we need to kind of catch up to the 21st century here, where again, most Americans live in a state that has adult use sales legal, in the state. So, and that means most members of Congress, or most members of the House anyway, now represent. It's a narrow majority, but represent one of those states.
Mm-hmm. Awesome. Okay, so Cass is asking, or Cassin is asking, when you say good accounting practices, does that mean it has to be GAAP, or will something else work? What is your definition of good accounting?
It doesn't have to be GAAP. It really doesn't have to be GAAP. GAAP is really only for the public companies and the bigger companies. You don't have to change your accounting methods necessarily if you're on a cash basis or an accrual basis, depending on where you fall in that spectrum. It's just having good records. Having undergone a bunch of IRS audits with my clients. As long as you've got well-documented records, you've got everything in line, you can show where you've reallocated certain costs to COGS, etc. I think you're in good shape. But keeping good accounting records is really that. No chicken scratches, no shoe boxes. Get someone, get a bookkeeper to put it into a QuickBooks or any type of other accounting program, and have something that they can follow. Because if you don't have that, you're dead in the water, basically.
Right. And then follow the same methodology year over year. So there's consistency, the accounting, and then determine if the accounting complies with the accounting rules under 471C, and if it's a 471C taxpayer, or if it's a 471A taxpayer, and if the accounting follows those rules for tax purposes. And they're vastly different.
Yeah, and I also like to think about audit ready books, because we know this is a industry that will be audited not only by the federal government, but by your state and local governments. So support for every single decision and every single transaction that you have, make sure that there's proper support. When you go and you get a receipt, you got to get that stuff to your accountant. You can't, lose these things, and make sure that they're able to support whatever position they take in your financial statements.
You contact Naomi if you need help with that, right?
All right. And so Mitchell is asking, he says he attended Americans for Safe Access recently. They are proposing the creation of a new schedule, Schedule 6, which would be free of DEA oversight and is comprised between rescheduling, descheduling. What are your thoughts on creating a new plant cannabis only schedule?
Yeah, I could chime in on that. I mean, I really appreciate the, ASA's work in the medical space, through the decades, and this is sort of a creative way of looking at the potential federal rescheduling. We don't see it as one being very likely, politically plausible that this would happen, any more so than what would be better, which would be to deschedule. And put this, we don't, the way the CSA is drafted, this would all of these substances come under the purview of the DEA. And yes, we could carve out a new schedule, but why do that when we can just take this down a pathway that's looking closer to alcohol, which is what NCIA has been advocating for, putting this under the jurisdiction of TTB primarily, which is where alcohol resides federally. And then, allowing and continuing to allow the states to maintain significant regulatory oversight. So Samantha, TTB is the Tax and Trade Bureau, which is Tobacco Tax and Trade Bureau, which is where tobacco and alcohol are under ATF. So that's, it's not a bad idea. I don't want to pan it in that kind of a way, but we just don't really see the need for doing that when we have another avenue, which is and either would be a pretty big political lift, right? To either deschedule or create a new schedule. Why not just go with what we really need, which is descheduling?
Awesome. Okay, and now there's still a few more follow-up questions. So regarding the clarification on what happens to 280E and the rescheduling. So it's my understanding from lobby days, like I specifically asked the regulators when I went to my meetings, their idea of making this retroactive, and if they can support some legislation like that. And a lot of them mentioned to me that that's up to the IRS. So I'm not really sure what the answer is. Who is going to clarify exactly what this looks like when it happens? Is it the IRS or is it the DEA? It's my impression that it's the IRS is going to come up with some guidance. Do you guys have any
rely
thoughts?
on the IRS to come up with any guidance, to be honest with you. But trying to get anything done at the moment outside of 280E, as we've all seen with our other clients, is very difficult. So I wouldn't be relying on the IRS. It would just mean that if 280E, if we reschedule from 1 to 3, we don't have to worry about 280E anymore. I don't think it's so retroactive.
That's how I see it as well. The DEA isn't going to really be looking at the tax implication at all. They're looking at all of the other public health implications, and then they're going to move cannabis to Schedule 3, which then resolves 280E going forward. I can't imagine the IRS coming in and making a statement that they're going to make that retroactive, because why would they want to give up that 1.82 billion a year going backwards? They have no choice going forwards once the change is official. And I think that Congress is really the the only avenue for retroactive relief. I think it's going to take legislation in Congress, which anybody who's watching Congress right now is probably not happy to hear that. But we are working hard with our advocating and our allies in Congress to introduce a 280E retroactivity bill once rescheduling takes effect. I can't say that it's going to be a slam dunk by any standard, but it's something, you know, it's probably going to be a long fight, but it's one that we're ready for as the association representing the industry. We have businesses that have been on the hook for 280, you know, and have 280E liability going back a decade, believe it or not, and you know, in places where have had medical cannabis businesses in place. And so it's very important to our membership and to the industry to try to make that argument that, you know, the argument to me is that the DEA, and when they came out with this and FDA's recommendation to DEA to reschedule, didn't come out with some new revelation saying, oh, geez, in 2023, we found out these new things about cannabis. We need to make a change now. They're citing data and research that went back decades and decades to basically making the argument for us that cannabis should never have been Schedule 1 in the first place. And so therefore, the argument is 280E should not have been in place in the first place. And so, but it's a fight to take to Congress, I think, more than anywhere else, in my opinion.
And to
And then
expand on that, Aaron, 280 Cap E does not go away. It just won't apply to marijuana companies after it's rescheduled from 1 to 3. It still applies, at least in Colorado and Oregon, maybe in Massachusetts in the near future, to psilocybin.
That's right. That's a good. And I should stop saying it goes away. My audience is probably broader than I think. You're right about that.
Awesome. And then Cassie just wanted in our last couple of minutes, some clarification on the gap question. She mentioned that the state of Michigan requires gap. Do most states not have this requirement, or do you guys know which states require it and which ones don't?
And many states don't require gap, but some do. Michigan may be one, New Mexico may be another one. Neil, do you work more with gap?
Well, again, on the public companies, yes, but on my other clients, no. But yes, but you are right, correct on that. Whoever's made that point, Michigan does require gap. I'm not sure which other states do or not. Maybe Arizona. I'm not quite sure, Stephen, but maybe you know that better than I do.
Yeah, I think it's less than a half a dozen states require gap accounting.
Yeah.
But it's just something that we need to look at on a client by client basis.
Okay, awesome. Now there's one question that I saw a couple of times, which is a little bit off topic regarding CBD and hemp. But there's a question out there as to how does this impact that industry?
It's a great question, because all hemp products, if it's compliant hemp, is not listed as a Schedule 1 substance. So 280 Cap E does not apply. And if CBD is generated from a compliant hemp biomass, it is not included as a Schedule 1 substance under the Controlled Substances Act, and therefore it's not subject to 280 Cap E tax rules. However, there are some states now that are pushing back against intoxicating hemp products. So federally, it could be legal. Interstate commerce may be legal, but on a state-by-state basis, it may not be as legal as it once was. And I think when the new Farm Bill is enacted, be it a 2024, 2025, 2026 Farm Bill, whatever the nomenclature is going to be, there may be some language in that Farm Bill which is going to restrict when the hemp biomass undergoes its certificate, the COA, and that will determine then if it's compliant hemp and then the byproducts are exempt, or if it's not compliant hemp and therefore it's marijuana and then subject to any other of the marijuana tax rules and maybe federal rules.
Awesome. Well, thank you. We have just a couple more minutes. So if you guys have any final thoughts you would like to share, we can start with Neil.
Well, firstly, thanks, Naomi, for moderating. This has been a great panel, and Aaron for all his insight. And, I'll do a plug for NCIA. It's a fantastic organization. I've been involved with them for a while, and they're really doing good things. And as you can hear from Aaron, he's really on the ground and in the face of things right now. So please give them your support.
Awesome. Eric?
Thanks, Naomi. And again, just to echo Neil's sentiments, I appreciate everybody putting this together. I think, again, we're talking about outstanding AR. We see that capital is tight. We see on our book clients that borrow from us within the year grow on average 54%. So it shows that they're running great businesses. They just need something to kind of grease the wheels to enable them to facilitate growth, which confirms capital is tight. So would love to be able to help anybody. And again, if you do borrow from us, we pay for your membership to the NCIA, which we wholeheartedly support. And one last thing that we really didn't touch on as it related to 280E is that it forces us to sell products at an uncompetitive price relative to the illicit market. Should we remove 280E, it may help reduce the illicit market because now we're selling at a much more competitive, competitive price point. So optimistic. Thanks again.
Thank you. Stephen?
I think everything has been said. And thank you,
awesome.
Naomi, for moderating, and Brian and Aaron for all of your participation and pulling this all together.
All right, awesome. And back to you, Aaron.
Yeah, thank you, Naomi, and all the panelists for doing a great job today. I want to just thank everybody who's attending, and really I really want you to understand, like, this is a monumental change that didn't just happen like because somebody just woke up one day and decided, oh, let's make the marijuana policies a little better today, just out of the blue. It happened because of literally decades and millions of dollars in federal in investment in federal policy reform by not just NCIA, but organizations that date even before us. And this would not have happened if not for that investment. And there's still a lot more to do that we need, as has been discussed. We need federal legalization, descheduling, a new federal regulatory framework. We also need, which we didn't even get into, we need to make sure that a new administration doesn't use its jurisdiction under the Food and Drug and Cosmetic Act to start going after businesses that are state legal but are going to be illegally trafficking in Schedule III substances after rescheduling. So NCIA is working on all of those issues as we have successfully brought us this far, thanks to our members. But we need, if anybody listening on this webinar is invested at all in the cannabis space, which I assume you are if you've made it an hour in, you need to be invested in reform. This is a movement. This is not just an industry where you kind of sit on the sidelines and hope that things are going to get better. We need to invest in policy reforms that are going to ensure that the industry and your business can actually prosper. And so the best way to do that is to get involved with NCIA. Go to our website, thecannabisindustry.org. Check out all that we're doing. We'd be happy to talk to anybody here about our work, how to get involved, how to make sure that you have a seat at the table as we develop our policy framework around new emerging issues like intoxicating hemp, et cetera. We are a very inclusive member organization that exists for our members. We're led by our members, like the folks that are our committee members on this webinar. And so we want to hear from you and want your participation. And together, we're going to be stronger than if we go at it alone. And so again, thank you all for your being here, and for the participants on this panel. It's been a great conversation, and I look forward to the next one with our scientific advisory committee.
Rock and roll. Well, thank you so much, Aaron, for tying all of that together. Thank you, Naomi, for masterfully leading us through all of the complex issues that we needed to touch on and really diving deep into so many of these fantastic questions that we received from our audience members. We really like these webinars to be an interactive educational experience and for you to have a direct line to our cannabis industry experts. And I think today is a perfect example of the educational opportunities that we provide to our members and supporters. And I think this goes really in line and really ties together with our midterm committee application period. If any of you all are considering taking your involvement with NCIA to the next level, I know half of you all here are current NCIA members. There is no better time outside of joining us for lobby days that just concluded for you to really link in and take your involvement to the next step. The committee application period is running for another 2 weeks, I believe. So you've got plenty of time to connect with your fellow committee members here, learn more about the amazing opportunities that can provide you and your business, and apply today to secure that midterm seat. As always, we're going to close out today by just giving you another quick preview of some other upcoming activities that we'd love your all's participation in, and then highlighting all the member businesses and sponsors that made this episode possible. Like I posted that quick poll a little bit ago, thank you all to over 75 people in the audience that immediately said yes, they wanted to register for next week's episode. So I'm really excited to join so many of you all again here next week, same time, same bat channel. I'm not going to get tired of using that for committee insights, advancing cannabis science, research opportunities, and challenges post-scheduling. You all saw the amazing contributions that Casson provided to today's program. So just wait until we have a 1-hour conversation led by them next week. It's going to be fantastic, and it's really going to pick up the baton from some fantastic programs that the Scientific Advisory Committee spearheaded for us last year in particular. All right. And with that, thank you all for joining us today for the first installment of our new multi-part webinar series. We hope you found the session insightful and informative. We really appreciate the valuable insights shared by our expert panelists from the Banking and Financial Services Committee, and we hope you feel better equipped to navigate these regulatory changes in the cannabis industry. Please remember to submit any further questions or feedback through the survey that will hit your inbox in the next 48 hours, and be on the lookout for the recording to be posted publicly in turn with that 48-hour survey that'll be sent out. Stay tuned for the upcoming installments in this series. We'll be really excited to put episodes 3 through 6 on the calendar in the next coming days, where we will continue to provide you comprehensive analysis and strategic guidance on the impact of these changes. Thank you again for your participation. Have a great day.